Hello and welcome to Simply Tax. Now, before we get to the episode today, Wednesday, December 9, 2020, I want to let you know about something exciting that I don't want you to miss out on. As you've hopefully come to expect, the Simply Tax podcast is here to deliver practical and timely episodes to cut through the static of the tax world and simplify your tax challenges. As you may also know, we also provide video content to help strengthen your tax mind on our Simply Tax YouTube channel, like our Death and Taxes series that we released last year. On Monday, December 14, we'll blend tax insight and drama with the YouTube debut of our latest Simply Tax production, The Missing Deduction. Here's a preview.
Oh, Tax, something terrible has happened. My Quincy's gone missing.
Missing, you say? I'm looking for a fella. Goes by Cupid. You know him?
Yeah, who doesn't?
Is there something wrong with Mr. Cupid?
I'm afraid he's missing, Mr. Minimus.
Perhaps he got limited.
Eliminated?
No, limited. There are limits that kick in once taxable income crosses certain thresholds.
50% of wages, 2.5% of UBIA on qualified property, plus 25% of wages when taxable income exceeds the thresholds, and an overall limit based on 20% of taxable income.
Who are you?
The name's Tax. Taxation's simple, to be precise.
Oh, the famous private investigator.
This is all fascinating, Tax, but where is my Quincy?
Lost, old man?
I'm looking for someone. Goes by the Pro.
Is that so?
Word is that he's a whiz when it comes to creative tax solutions.
Well, mister, you found him.
Where's Mr. Cupid now?
Hold on now, that's not the right question.
Tax, quit with the miscellaneous deduction type information. You know the 2% deduction related to those is suspended until 2025.
That's right, Carl. I was getting there.
Cupid, is that you? You look so different.
Simply subscribe to our Simply Tax YouTube channel today so you can crack Section 199 Cap A and find Cupid before it's too late. And speaking of today, on the podcast today, I'm excited to share with you a conversation I had with Melanie Lauridsen with insights from the AICPA Tax Policy and Advocacy Team to help you cut through the static of IRS penalty relief and their electronic signature program. 2020 has clearly been a challenging year on many fronts, and interacting, contacting, and working with the IRS has been no exception. So I won't penalize you here with a long intro, and will grant you the relief of jumping right in, starting with a little bit more about Melanie.
So I'm Melanie Lauridsen. I am a senior manager for the Tax Policy and Advocacy Team. Been working with AICPA almost 10 years now. And specifically within the AICPA, my committee is the IRS Advocacy and Relations Committee. And what that means is I take over all the tax administration issues and I communicate with the IRS. And as far as tax administration, some people aren't always sure, well, what does that mean? And in a very generic way is the issues that touch base across the board for a lot of people and not necessarily one subject matter area. So identity theft, it can hit individuals, corporations, exempt organizations. That would be a topic that I would work with.
I guess issues when they don't work out or where there's a problem
Correct.
or something like that and it affects multiple people perhaps.
Yes, and it needs to be communicated with the IRS. So we definitely communicate with the IRS constantly.
Yes. I was talking with a colleague here recently about how, almost any year anymore hasn't been like a regular year. I mean, I feel like it's been years since we've had maybe a regular year. Tax reform and all that. I mean, that there was so much that happened there. But I mean, 2020 has probably been a pretty busy year for you in terms of communicating with the IRS, I have to think.
2020, yes, I agree. We've communicated with the IRS, with Treasury, government officials, much more than what we normally have. Having said that, it's also probably what I've heard from our membership is probably one of the hardest years that people have gone through, whether it's on a personal level or on a professional level. And there's just a lot of need out there and help and support that people need to hear from the IRS.
I think that's what makes it so challenging and almost exhausting too, because there's this kind of constant churn and you know that there's some real need out there. Ed Carl, in your group there always says that, you don't see tax legislation in an election year. That ship sailed because we've seen quite a bit of tax legislation this year. But also, I mean, we don't generally have a global pandemic that we have to contend with. And I know there's been a couple of rounds of relief. And with that, there were a lot of concerns around the deadline and filing on time. I guess maybe what we can start with, and I know there was a comment letter that the AICPA put out on this and your committee put out on this, talking about some of the penalty relief and for late filing and late payment. Could you talk a little bit about what generally happens if the taxpayer late files or late pays the tax that's due with their return?
Right. So if a taxpayer doesn't file their return on time, they get a failure to file notice. And essentially, that's a penalty of 5% of the amount of tax that's due. And it can accrue up to a maximum of 25%. Failure to pay penalty means you didn't pay what was due of the tax return by the time the tax return was due. And that accrues at 0.5% per month. And once again, it goes up to a 25% penalty that can go with it of what is due. And one thing to note too, even between the failure to file and failure to pay penalties, it's not 25% on top of another 25%. It's up to a 25%. And the failure to pay penalty reduces the failure to file penalty. Slowly but surely. So if you find yourself in that situation, you will find yourself in a penalty situation that the IRS will assess.
And that's good to know, I think, because I do think there is confusion on that in terms of how those two interact with each other, I guess we'll say, right?
Right.
So, I think the common question I know I get from taxpayers always is, well, how can you avoid the penalty? And maybe we'll go beyond the obvious, we'll file and pay on time, I suppose.
Right.
Right. But what happens if you didn't and now you have these penalties?
So I don't think there is a way to avoid the penalties per se. Like you said, you would have to pay on time or file on time in order to truly avoid them. Having said that, if you get issued a notice, there are ways that you can request for relief from the IRS for those penalties. So the very first one, which I say save as long as you can, is the first time abatement penalty relief. And essentially, you need to qualify for it. So like if you haven't received a penalty within the last 3 years, you're up to date on your tax returns, you're current, and even if you owed but you made a payment arrangement, kind of like an installment arrangement, you can pretty much go to the IRS and say, hey, I didn't quite make it. You don't really have to have any real reasoning behind it. And the IRS looks at your file and they're like, you know what? You've been a good taxpayer. Yes, we'll grant you first-time abatement. And there's no letter to write or anything. You do need to call the IRS and they can grant it for you. And then the penalty itself will get cleared up. Having said that, though, because we are talking about a year in which the coronavirus has definitely impacted everyone without exception, there's something that's called reasonable cause. And that is a way to avoid paying or avoid being imposed on the failure to file and failure to pay penalties for the taxpayers. However, in order to establish reasonable cause, the taxpayer needs to show that they did exercise ordinary business care and prudence. So in other words, you have to show some good faith that you really did try to file the return, make the payments. However, for circumstances beyond your control, you really were just unable to do so. And in those situations, the IRS will take a look at what's going on with you and they'll make an assessment. It's not a black and white. There's a lot of gray areas. There's a lot of consideration that gets into it, and it really becomes based on factual circumstances for each and individual that applies for reasonable cause before they waive the penalty on it. Personally, I think coronavirus is so broad that it applies.
I know those are kind of the types of situations that you look at, but you did mention that you kind of have to be able to demonstrate it.
Right.
And maybe even in this circumstance, because sometimes it's, again, so much is coming at everybody, maybe it's harder to demonstrate. How do you go about doing that and supporting it?
there's a process, and we can go into the recommendations that we've had. The IRS has something, the IRM, the Internal Revenue Manual, which has it's a very long section on how you qualify for it and how you can demonstrate for it. And it really is a lot of gray. There is, like I said, there is no black and white. There's no guarantee that one situation or another will give you reasonable cause. And I think with it, you have to be able to take a look and stand back and show that you really did try on your part to fulfill and do what you could. And I think that's where really the best defense that you have, and to also be able to document it in the best way that you can.
So you mentioned some of the recommendations that the AICPA made. Could you talk a little about some of those and some of the considerations for taxpayers and practitioners, given kind of the ongoing challenges that we're having?
Absolutely. So there's a couple of recommendations that we've put out, and the environment that we're in keeps changing, right? So our first set of recommendations was before penalties were issued and before the deadlines came along. And in that circumstances, the recommendations that we put forward were, in an ideal situation, if the IRS could do this, it would prevent a lot of burden on taxpayers. So having said that, ideally, we would have loved to have seen an automatic waiver of penalties for people that are impacted by coronavirus. Also, we are asking for the IRS to establish, and we still are asking them to establish, an expedited process and streamlined process for installment agreements, but also for the considerations of reasonable cause. The other thing that goes with it too is, at that time, we asked the IRS to completely stop and halt all of its automatic collection activities. So all those notices that people are getting, to stop that for at least 90 days after the July 15th due date, but then to also reassess it and take a look at the environment. Because keep in mind, when we originally put in these recommendations, we don't know how long coronavirus is going to last. And ideally, yes, by where we're standing now, it would have been nice that it wasn't there and there's no need for further relief, but that's not the world we find ourselves in. So we did ask them to reassess, look at what's happening, and then stop those collection activities. People don't need to be seeing penalties right now when they're suffering and going through these hardships. So those were the first set of recommendations that we offered in the IRS, and we had hoped that they would take up on those. However, unfortunately, we have seen notices coming out from the September 15th due date. And so we have gone forward again to the IRS and offered another set of recommendations for those people who are finding themselves with penalties and notices in their hands. And so one of the first things that we've said to them is, for those people who have received those penalties, we're asking the IRS to provide something similar to the first-time abatement, in which, as you recall, it really is just picking up the phone, having that conversation with the IRS, saying, hey, due to COVID-19, we really were unable to file the return. And if people are getting notices now, they filed very close to the deadline or the payments. And so something should be offered to them without having to write a letter, without having to go through this whole lengthy process of reasonable cause, where there's, like I said, a lot of gray with it. First-time abatement, if you qualify for it, you get it. And we say similar to first-time abatement in that it should be extended. However, we want to still preserve. If you have first-time abatement available to you, we want to preserve that ability for you, because COVID-19 is just an extraordinary situation that people weren't planning on it. They can't get around it. It is what it is. And so therefore, they shouldn't get penalized for it. Because what we're asking for really is an expedited reasonable cause, similar to first-time abatement. So what we've asked them is to also develop some guidance in a form kind of like an interim guidance, in which the IRS develops specific examples for both practitioners and the taxpayer of how reasonable cause could apply. So in other words, this is a more extreme situation, but if there were to be, say, a death in a small firm, in a company, and they were unable to gather their tax data due to that death, which is created by coronavirus, and are unable to provide the documentation to their practitioner to then be able to file on time, from my perspective, that's a clear case of reasonable cause. And the IRS should develop these scenarios so there isn't as much gray. And for the telephone assisters who are picking up the phone to be able to have these examples in front of them, to be able to train in them. And so when a taxpayer calls and says, I had this situation because of coronavirus, they're able to say, you know what, you would qualify for this abatement of penalties with it. So another thing that we've also asked them to do is people who are going through coronavirus who can't file on time or pay on time, there really should be some sort of, ideally we'd love to be able to see a dedicated call center, right? Where they can just call and whoever picks up the phone is trained and ready and able to offer them that relief. Developing a call center, though, takes time and money. And right now we have neither, and the IRS is doing what they can. So we've even suggested something as simple as, hey, maybe a dedicated prompt on any one of your existing phone lines where the taxpayer can call, they request for this abatement of penalties due to coronavirus, and they're able to get it. And once again, the key with this is having those telephone assisters to be trained with these scenarios that would qualify for reasonable cause, but in an expedited and streamlined manner. That's an earful, I'm sorry.
No, because there's a lot to it, because it's not like, I'm sure from many people's perspective, perhaps it would seem like that's just an easy thing to go out and do. But to your point, there's a lot of cost and logistics and an administration and considerations have to go into it. It's not as easy as flipping a switch. But it would seem like the recommendations would, I guess, both benefit taxpayers and really the service as well because of the time. Because obviously we know they're stretched for resources as well in this environment and the amount of mail that they've had to process and get through in the backlog and all that. So it seems like it really would benefit kind of everyone involved.
I don't think there's any benefit for anybody to see these penalty notices going out and without a quick abatement of them. From the taxpayer's perspective, the practitioner's perspective, nobody wants to be drafting these letters because reasonable cause, if you look at it, you do have to write a letter. It's not an email. It's snail mail, right? And when you have a backlog of 5 million letters and trailers right now, this is the last thing the IRS needs, the last thing taxpayers needs. And how do you go back to a taxpayer who has had some event as to why they can't file? Nobody wants to not file on time, or at least I don't know people who want to not file on time, right? If people want to just be done with it and not have to deal with the IRS. And so to then have a notice come in during this hardship, it really is insult to injury.
Where we are currently, and like you said, the situation continues to evolve and will probably evolve after we finish our conversation here. But I guess where are the IRS and how have they responded so far, if at all, to the recommendations that the AICPA has made?
Ideally, we would have loved to have seen broad penalty relief, kind of like in our original letter where they just weren't sending out the letters to other people. Having said that, I think there is concern for the IRS on their part that it opens up, broad penalty relief opens up for the potential for abuse. There's always that one person who doesn't want to pay or doesn't want to file or doesn't want to do something. However, I think that's kind of punishing the just for what the one person did wrong. And I think it creates a little bit of hardship with that. However, the IRS, they did offer payment relief for taxpayers through IR 2020-2248, I think, and I can send you a link in which essentially they did take us up on the installment agreement recommendations that we had, in which we asked the IRS to take a look at people who already had installment agreements or were requesting for an installment agreement to not base it on some formula. And this also goes with offers and compromise, to not base it on a formula, but on the ability of the taxpayer to pay what they could pay under these circumstances and to really be more flexible. So we have seen the IRS come forward and be more flexible with that. We still would like to see broader penalty relief. But I also think there's something that's important to understand of the IRS too. The IRS themselves are going through the same hardships that the taxpayers are going through, right? They are facing local laws of how many people they can have in their buildings, of being able to telecommute. And the IRS really wasn't set up for telecommuting. And they're in an environment where that's what people are having to do now. And they're adjusting and trying to work for these things. And my point with this, I'm not trying to excuse them. What I'm trying to say is, for example, the systemic abatement or just not having these penalty notices go out, because that would have been an ideal world. I think the programming that has to go in and the manpower over at the IRS to offer something like that just may not be available to them right now. And so we find ourselves in the situation that we're in.
Last month, IRS Commissioner Rettig indicated the IRS does not plan to issue blanket relief, as they feel the current first-time abatement and reasonable cause penalty waivers are sufficient. That said, there's still hope things might change, and earlier this week, the AICPA, along with Alliant Group, the National Association of Enrolled Agents, the National Association of Tax Professionals, the National Conference of CPA Practitioners, the National Society of Tax Professionals, and Padgett Business Services renewed their calls for penalty relief in a joint letter to the IRS and Treasury. In the letter dated Monday, December 7, 2020, the group reminds Assistant Secretary Cotter and IRS Commissioner Rettig of the unique challenges the IRS, taxpayers, and tax professionals all face amid the pandemic, and calls on the IRS and Treasury to provide targeted penalty relief through the creation of an expedited and streamlined reasonable cause abatement process to taxpayers that are affected by the coronavirus pandemic that eliminates the need for written requests. The letter also calls for the development of specific coronavirus examples for impacts on both taxpayers and tax professionals, where the taxpayer can self-certify that they qualify for reasonable cause abatement, and that the IRS share these examples with all telephone assisters through interim guidance. And lastly, the letter requests a dedicated telephone number or dedicated prompt for taxpayers or their advisors to call to request coronavirus-related penalty relief. Now, speaking of requests for flexibility and changes, the AICPA also recently submitted a comment letter on the IRS's electronic signature guidance. Let's learn more, starting with what the guidance provided prior to the current COVID-19 situation with regard to electronic signatures.
So with e-signatures prior to coronavirus, because I feel like everyone's life is before or after, right? Hopefully there'll be a better after here.
Yeah.
So with e-signatures, essentially, you could e-sign the e-file authorization forms for extensions and also for the return for individuals. So that's the form a practitioner that would just send out to the taxpayer saying, hey, do you give me permission to e-file your return? And that form was allowed to have e-signature for the 1040. So it's the two forms that were allowed. However, because of the pandemic, kind of like what you said, the IRS did try to make adjustments. And they did come forward on March 27th with their first memorandum, which has since been updated a few times. But the initial memorandum essentially gave e-signature relief to documents that were related with examination and collection efforts. So that didn't do a lot of good for the taxpayers. It really allowed for the IRS to continue with collection of taxes with it. And what the relief was, is they allowed pictures and scans and faxes of people's signatures on these documents. So essentially, you could sign a piece of paper, take a text of it, send it to the IRS, and say, this is my signature on this, or your practitioner to continue the collection activities. So that's where the IRS was with it. And of course, the AICPA, we didn't like that. We didn't think it was near sufficient for what people were going through. And there's a very long history with e-signatures in the IRS. We've requested for permanent relief at least back to 2014, if not earlier, to see some sort of relief. However, when we saw this memorandum that came out, we decided we needed to remind them again of the need for permanent relief for e-signatures, and our hopes at the time were to be able to implement something permanent before the filing deadline, and then to be able to continue with a permanent relief for e-signatures.
Going back, you said it's not a new issue, it's just kind of taken a new
Correct.
form perhaps, but I mean, in many other aspects of dealing with, your bank or other institutions, you kind of get used to that as a customer. And then I know that's always a challenge. And the questions come from taxpayers of, well, why can't I do that? I can sign electronically everything else, or you can sign electronically everything else. That doesn't make any sense. But again, it goes back to resources and so forth. And I'm kind of hearing you talk a little bit about kind of permanent relief versus temporary relief. Why the distinction? Maybe unpack that a little bit.
Right. So absolutely. So one thing before I jump into that real quick that I do want to mention is I completely agree with you. You know, taxpayers, we're living in a global world now, right? And you can purchase houses through e-signatures, you know, like what is it, paid or DocuSign or whatever. You can do these amazing hundreds of thousands, millions of dollars, and in some cases, billions of dollar transactions through e-signatures. So people definitely come back and ask, why not with our tax returns, right?
Right.
And the answer to that is identity theft. It really comes back to the IRS. If you take a look at their infrastructure, they are highly targeted for the information they have. Because if you're able to ever hack into the IRS, that's a gold mine, right? And so the IRS takes very extreme precautions. And it's because of that they haven't really moved forward with permanent e-signature relief. So the difference between permanent and temporary, and that really goes back into our recommendations, but it's important for people to note what it is. If you look at the temporary relief that the IRS themselves provided, it, like I said, it's you can take a picture with your cell phone of a signature that I can scribble on a piece of paper. Right? And you can text it to your practitioner and they can submit it and it will be accepted. There's no security or identity authentication in that process. There is nothing that says that signature on that piece of paper belongs to that other person. Because I could have one of my kids scribble something on a piece of paper, snap a picture of it and send it off to someone and say, here you go, here's an e-signature for you.
Sure.
And there's no way to confirm that. So that's temporary relief versus the permanent relief, which we have asked for. And just to be very clear, the IRS will never be able to grant what we know as a temporary relief that they've given into a permanent type of method for authenticating taxpayers because there is zero authentication for it. And there needs to be a balance because, like I said, if you can get information from the IRS, it's a gold mine of information for the taxpayers' most sensitive information.
That's sort of a moving target too when it
Yes.
comes to identity theft, right?
Yes.
And so it seems like it's always trying to be one step ahead of wherever they're going. So definitely know that's been kind of an ongoing initiative for them as well. But you know, this is sort of a byproduct of that until we can kind of figure that out, I guess, if you will. That's going to kind of be an ongoing issue, I would suppose.
Right. And so if you take a look at what we've done and what we've been asking for the IRS, as recently as June, right before the July 15th deadline, we requested the IRS to come forward with permanent relief. So what that entailed was them expanding the e-signature, which they allowed on the e-file authorization forms, but making it for all the e-file authorization forms. And we also expanded that even further to say also for non-income tax returns, because there are definitely documents out there that that are parts of attached to the tax return that also need signatures. And so what's the good if you can't even file a complete individual return if you have an attachment that can't be signed and then you have to paper file the whole thing.
Right.
And so we expanded it to something along, those lines to really make it broad. Now, one thing to be noted is in order for there to be permanent relief, for the types of relief that we've had, the IRS does need to go back. They need to update the IRN. They need to go back and update notices. There's a lot of different documents out there that require, once again, manpower, people to think it through and update these documents. And unfortunately, we didn't see permanent relief and the clock was ticking and it still is ticking. And so we came forward and asked for a temporary e-signature relief. And what we asked at that point was, take this memorandum that you put out on March 27th and really expand it to all types of tax returns. Well, to the e-file authorization forms, because the actual tax returns themselves aren't necessarily signed. And so we asked them to broaden it and expand it. And in our conversations with the IRS, they did come forward and they did offer further relief. In September, they provided that for people. And people could start, like I said, signing a piece of paper, taking a picture, sending it off, right? So there was no need to meet in person. And that's very, very helpful with coronavirus. One thing I should note, that the power of attorney forms were not included in receiving e-file signature relief. E-signature relief, my apologies. The reason those forms didn't get them is because those forms are considered the gateway to all the taxpayers' information. So if I have a power of attorney for the taxpayer, I can submit that to the IRS and I would have transcripts and every piece of information for that taxpayer available to me. So those two forms require additional looking at with them. So they haven't applied for the temporary relief as of now.
Certainly, yeah. Which, and maybe even going back to the point on the penalties and so forth. I know that, speaking as a practitioner, sometimes to unravel and figure things out a bit, and the late filing and the late pay sometimes you can kind of deduce those from the notices. But there's usually something there that kind of warrants a further conversation and needing to get a power of attorney form. So to your point, that definitely, I guess, appreciate the significance of it, but also the challenges that come up with it, particularly in this period of time, because you're trying to figure out a situation and you need a power of attorney to even start the conversation.
Absolutely. However, there is hope.
Okay.
I will say there is hope from the IRS's perspective.
Mm-hmm.
The IRS has acknowledged that getting, an actual wet signature is very burdensome for the practitioners and for the taxpayers. And so they're actually working on a permanent solution for the power of attorney forms. And in theory, we should be seeing something in early 2021. So we're talking January, February timeframe, possibly.
Wow. Okay.
To see something that will come forward that the IRS has been working on the power of attorney forms. To be very clear, it's just on the 2848 and 8821, just those two forms for permanent relief. My hopes and my goals are that since these two forms are the gateway to taxpayers' information, that if this works smoothly, then the next step for them would be like, okay, you now have a permanent solution for these highly sensitive forms. Now let's expand that to all the other forms.
As Melanie just mentioned, having a new process in place to give tax professionals and taxpayers a safe option to electronically sign and upload critical documents without an in-person meeting would be a significant development. In a recent article on irs.gov, authored by Sharon Fisk, who is the director of the IRS Office of Professional Responsibility, indicates the IRS plans to launch a new irs.gov secure submission platform and a new page titled Submit Forms 2848 and 8821 online that will allow tax professionals to upload third-party authorization forms electronically starting in January. The new process won't eliminate the reviewing and processing time by the CAF unit. However, it does, like I said, provide a safe option to electronically sign and upload these important documents. We've included a link to the show notes of this episode, to the article, along with a link to a free 60-minute IRS webinar tomorrow, December 10th at 2 p.m. Eastern, where the IRS will further discuss the new process and platform.
And we will ask the IRS, as we keep getting further and further in the coronavirus situation, to continue offering the temporary relief further, because the memorandums, just as an FYI, those do expire on December 31st. And the way things are going and looking like, we might be in the same situation for the next filing season. And once again, we would need that temporary relief at least to help us get through the next filing season.
I think that's a reality that I think a lot of people are starting to process, that, as odd as it was to go through a tax filing season that we just had, that this is here to stay a bit longer, and doing extensions and tax returns from the living room and the kitchen table, as I've been kind of saying, and I myself have been doing. It's something that we're going to maybe be looking at even in the next year, to your point.
And for the relief too, that's unfortunately something that we absolutely need.
So I guess with that, what's next when there is sort of a layer of uncertainty here, and so much to kind of figure out, and work that goes into it. Where does the group go, and where will you be focusing as we go forward?
Like we've discussed many times now, the coronavirus really is an extraordinary event, unlike anything we've ever seen in history. At the times, the situations that everybody finds themselves that we're in. So we will continue to keep pushing for relief, for penalty relief. We will continue to look at e-signature relief, but other types of relief too, as they arise. We definitely open our ears and see what's going on. Things are quickly changing, so I can't even say what's next for a couple of months from now. But we do know that there is a need for transparency. There is a need for taxpayers to understand what's happening, what relief there is available to them, in communication from the IRS, and we will continue pushing in those paths.
I've had conversations with some of your colleagues before about the technical research panels and the committees and that process, but I would imagine I know that's part of the process that you've gone through, and there's obviously a lot of people that are involved to get a comment letter out. I guess any comments on the comment letter process, I guess, or how that went, particularly in this environment?
So the comment letter process, what I love is the people are passionate. And everybody wants to be able to provide a solution for what we're having and solid recommendations to the IRS. I think we have a lot to offer to the IRS with those recommendations from the people. The people that are involved in helping us develop our positions are people who are truly on the front lines. It's not just, say, the large firms, the small firms. We really talk to everyone across the board and try to come up with the best solutions in these comment letters. Sometimes they're not ideal. We would, like I mentioned, we would love to see systemic abatement and broad penalty relief. And that's what we've asked for, but that's not going to happen. And so we have to take a look at what's viable from the IRS's perspective and really make assessments and judgment calls and have these conversations with them to understand, okay, if you can do this, then what can we do to provide A, B, and C to the taxpayer for it? And so it's a process, and it evolves and it changes continually.
A lot that goes into it, and I have a lot of appreciation and respect for that, and I guess thank you for that. But I guess with all that kind of that we've talked through, because I feel like we've covered, there's a lot of ground to talk through there, right?
Yes.
Any kind of closing thoughts or things you would leave listeners with?
Well, like I've said, we would love to see from a broad policy perspective, we do believe that this is a year where the IRS should not penalize taxpayers for late filing returns or late payments that were delayed due to COVID-19, or for taxpayers and the representatives, that we will continue to push for further relief for taxpayers and the representatives. And we also feel that the IRS could generate invaluable goodwill by continuing to look at the situations in which people do need relief and offering that relief to people.
That's it for today, but we'll have more conversations with insights from the AICPA Tax Policy and Advocacy Team, just like the one you heard today in the new year. In the meantime, you can learn more about Melanie, the AICPA, and get links to the resources mentioned during the conversation today in the show notes of this episode, available at bkd.com/simplytax, which is where you'll also find an archive of all of our episodes. Don't forget, please subscribe to our Simply Tax YouTube channel so you don't miss out on the missing deduction that drops next week. And be sure to also connect with me on social media. You can find me out on Twitter at Damien Martin CPA, on Instagram at TaxDad, and out on LinkedIn. I'm Damien Martin, and thank you for listening.
The information contained in this episode of Simply Tax is based on data available as of the date of its release. BKD is under no obligation to update this information if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances. Any information provided is not to be considered as tax, legal, or financial advice. Please consult your tax advisor before acting on any matters covered.